To short on Coinex. You need to understand the basics of short selling and how it works on the platform. Short selling is a trading strategy that involves selling a cryptocurrency you do not own with the expectation of buying it back later at a lower price to realize a profit. First, create an account on Coinex and complete the verification process. After verification, deposit funds into your account to use for trading. It is essential to understand the fees associated with short selling on Coinex, including interest rates and trading fees. To short on Coinex, navigate to the margin trading section and select the cryptocurrency you want to short. You will need to borrow the cryptocurrency from Coinex, which will be reflected in your account as a negative balance. The next step is to place a sell order for the borrowed cryptocurrency at the current market price. This will give you the funds to buy back the cryptocurrency later at a lower price. It is crucial to set a stop-loss order to limit potential losses if the market moves against you. After selling the cryptocurrency, monitor the market closely and wait for the price to drop. When the price reaches your target, place a buy order to cover your short position. This will close your short position, and if the price is lower than your initial sell price, you will realize a profit. Best practices for shorting on Coinex include starting with small positions, setting realistic targets, and continuously monitoring the market. It is also essential to have a solid understanding of the cryptocurrency market and the risks associated with short selling. In conclusion, shorting on Coinex can be a profitable trading strategy if done correctly. By following these steps and best practices, you can minimize risks and maximize your returns. Always prioritize risk management and stay informed about market trends to make informed trading decisions.